Hello guys, Steven Dux here. Welcome to this YouTube videos. And today we're going to talk about how to really trade micro floats and also giving you the two latest examples that happened last week. Generally for micro float, I do not recommend the beginners to trade this type of ticker. In here, I'm going to give you a couple of tips of how to really react and also cutting losses if you're stuck in a micro float. Before I start this video, make sure to click the like button and subscribe, and let's get into today's ticker. So when you're looking at a ticker that doesn't really have any type of history, there's no volume, no price range was created in the historical chart. All of the sudden, stock is gaining 50 million volume in a day and also 10 million volume pre-market. And the stock opened, traded about 10 million shares or 16 million shares. When we're looking at volume estimate, we are using the pre-market volume or the first hour volume to estimate the entire day total volume. For ACY, stock is definitely going to trade much more volume, but if you take a close look at how much range you can drop from $8 area, which is the pre-market resistance. So it started to spike around 3. Maximum reward will be anywhere between 4 to 5. So if the stock is going to trade more volume, but it's only going to have minimum reward, and that is not very ideal for micro float at all. Definitely it's going to create more range. For ACY, specifically that day, I did not place any type of trade in there because I do know that stock is going to trade more volume, which I cannot predict how far it's going to go. And also it's not worth it for me to short into a really tight range with a micro float stock. So ACY did the breakout. A lot of people are shorting ACY as well. Stock went from 6 to 38 without any type of pullback. In this case, if you're shorting a float that is under 2 million, it's considered a micro float. To cut your losses, especially when the stock reaches your maximum risk, don't wait for a pullback, don't wait for any type of potential red candle. Just cover your shares in market order. That's personally what I do all the time, and it can keep me safe from year to year. And the major mistakes come from that you're waiting for a push on a micro float, and that's where you take a huge loss. So ACY, the only way to trade this, potentially you can short around the $28 bounce, but that's the stock already dropped about 75% from the top. So let me explain why shorting ACY at $20 is not ideal. Let's look at the tickers that happened last month. So WNW, let's look at the intraday charting behavior. Stock went parabolic in the morning. It dumped from $160 to $72. That's pretty much dropped over 50% from the top. But you can see this instant recover from the bottom and consolidated, then dropped from there. Now the difference between ACY and WNW, WNW is a natural reaction from the retail traders trying to dip buy and sell at the top. ACY is completely different. It got halted because there was no news, and the halt is a T1 halt, not a volatility halt. The difference between volatility halt and T1 halt, T1 halt generally has pending news, and when the news generally comes out, it's either an offering or they say they have no news. That's when the stock drops 75% from the top. Volatility halt is completely different than T1 halt. There's just stock is trading way too fast, and also it's producing way too much range. That's when the stock get halted about 5 to 10 minutes depending on the exchanges. So in this case, T1 is a much severe case for the stock to drop from the top, and generally they don't really come back. So for ACY, it had a T1 halt. Once the T1 halt finishes, then the stock never recovered. Same thing goes to UUU. This is also a T1 halt, dropped, never recovered. But when it's a volatility halt, if the stock drops 50%, it has a high chance for the stock to come back, then drop into the next day. So make sure have a clear understanding of which halt it is to change your trading strategy. Another thing that you can take advantage of trading micro float is the higher the price of the stock, the less shares that investors can buy. So let's say I have $1,000 and the stock is at $1. I can buy 1,000 shares. But if the stock is at $100, I can only buy 10 shares. So the higher the price of the stock, the less shares I can buy. That means the stock is going to become a much bigger float because I cannot purchase that many shares. That applies to every single retail investors. So in this case, if the stock goes to $100 to $200, there's not going to be enough demand to satisfy the supply. And in that way, the stock is likely to either gap down or have some type of hope and stock drops 50% from the top. The third point is looking for a consolidation to short a stock. Either is on day 2, day 3, never short on the first green day. Never try to short into a parabolic, no matter how high the gaining percentage it is. So for example, ACY went from 6 to 38. The stock was up about 1,300%. People generally will use that gaining percentage. Let's say the average gaining percentage for microflow will be 300% to 500%, and people will use that as a guide to short into. But especially for stock like ACY, WNW, they're both performing a parabolic in the morning, and nobody can ever tell where it's going to stop. In this case, always wait for consolidations or just not trade it at all. For WNW, it did have some type of consolidations for you to risk off, but the overnight fee was way too expensive. For all of the conditions I just said, that microflow is not worth it for you to trade. First of all, that the spread between ask and bid is way too far that you're going to get a really bad execution. Second, generally most of the microflow, the borrow fee is extremely expensive, especially holding overnight. It's pretty much impossible. The overnight fee will basically take all of your profits trying to hold a microflow overnight. And also your risk is pretty large because manipulators can easily move a microflow $20 in one candle in the pre-market. So there's going to be two conditions that you can short into a microflow. First of all, that stock is running on day 2 or day 3 and you shorted it into a consolidations. The second point that you can do is wait for first red day. Those are the two only methods you can take advantage for a microflow. But never try to jump into the first green day. It is completely not worth it. From my personal trading performances, that I always give back all my gains from microflow by the end of the year. So by the end of the day, that you will never make $1 from trading microflow. Make sure stay away of the stocks that flow is under 2 million. And if you really want to trade it, make sure look for consolidations and sizing small. So that will be end of this video. Thank you very much for watching. I will see you guys in the next one.